Everybody, and welcome to Trading Psychology event for 2022. This event is brought to you by Timing Research and Trade Out Loud, and the event is fully recorded. All the recordings will be available as soon as they're processed on the Timing Research website. And David Cosmeter and I will be your host today. If you should have any questions, feel free to ask them in the room. Type them in the room. Make sure you select everybody in the room, not just host and panelists. So we will have full transparency. And of course, before we begin, let us remind you that all information provided today is for educational purpose only and should not be construed as investment advice regarding the purchase or sale of securities, options, futures, forex, or any instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors because you could lose money. So before deciding to trade, you should carefully consider your objectives, your level of experience, and risk appetite. Individual performance depends upon each person's skills, time, commitment, and effort. Results may not be typical. Individual results will vary. Of course, you must do your own research and make your own trading decisions. So with us today, we have a fantastic lineup of pro traders that are willing to share their secrets to trading psychology. And here with us, we have Valerie Fox that is joining us with secrets to emotion-free trading. Welcome, Valerie.
Hello, Anka. Thanks so much for having me. And thanks for all of you who are here live or even watching the recordings after the fact. These events are always so fun to do. And I love that it brings in people from around the world in all different types of trading endeavors. It's such a fun environment. So with that, let's dive in. I'm going to be going into the secret of emotion-free trading. I will just jump in. I see people are hopping on the call, so we'll just go ahead and get started here. Let me get my mouse working. There we go. I'm not going to go over this entire disclaimer. Anka just read one, but just remember the presentation's for educational purposes. I'll be sharing, some of my opinions about the psychology of trading and some of my trading experience and things like that. But ultimately, everyone's responsible for their own trading results. So let's talk about the agenda of what I plan to cover. I'll be going into why and how emotions get in the way with trading, the best way to remove emotions from trading, and where I believe every trader's focus should be. And then at the end, I will wrap up with some Q&A. I've tried to design this presentation in a way that there will be time at the end for Q&A. So if you have questions that come up, maybe just jot them down on a little sheet of paper. Try to hold them till the end in case I answer them. But certainly I would love to open up the dialogue at the end for some Q&A. And also just thanks for being here. I know everyone's time is precious. And, again, if you're live or watching the recording, I want to just let you know that I appreciate you and taking your education seriously. I recently released a new book earlier this year, and if you use the link below, for those of you that are on the call, I want to give you also a free bonus, which is the Audible version of my book. So you can go to tradefocus.com/book if you want to check out that book. But ultimately, it's all about just helping traders get better results, period, no matter what market you trade. So there's a lot of good info in there, along with a strategic roadmap. Okay. Before we dive in, I want to just tell you a little bit about me. I recognize that some of you know who I am, some of you don't. So I'm not going to spend a lot of time on this, but ultimately, I'm a wife, mom, trader, world traveler, and growth seeker. The picture on the right, you can see myself, my 5-year-old daughter, my husband. I've been personally trading Forex for just over 11 years with my own money. Lots of ups and downs over those years, specifically in the beginning. So, I share this with you just so you know that, my journey to trading was not just straight up the way we all hope it will be. I had a lot of bumps along the road in my early years, and a lot of that did go back to the psychology of trading and managing my emotions and really learning a lot of the lessons I'm about to share with you in this presentation. Also, I retired myself from corporate America 4 years ago. So, I went to college, and after college, I worked in corporate for about 10 years in the States. And, I loved it. I thrived. I got promoted. I did everything from sales and operations and management, working at small companies, Fortune 500 companies. I really loved it for a long time, but ultimately got to this point where I was just kind of craving some more work-life balance, craving maybe a different type of lifestyle. I had met my husband in that time frame, and we wanted to travel more. We wanted a little bit more freedom from the office lifestyle, and that's honestly how trading came into the picture for me. And I started trading it on the side while I was still working full time, and ultimately, worked my way up to being able to leave my job about 4 years ago. And then since then, I've dove into coaching. I learned a lot of lessons over the years, as I mentioned earlier. And, I've since coached thousands of traders around the world, teaching them my strategy, helping them focus on discipline and more objective trading styles. And I'll share a little bit more about that as the presentation unfolds here. But lastly, last year, I also, kind of a fun fact, I moved from the US to Portugal. So one of my dreams that I had been working on, aside from, having a portable income with trading, is to live abroad, live internationally. And so my husband and I finally achieved that last year. We moved to Portugal. Specifically, we're on a little island called Madeira. It's beautiful and we really love it here. And it's, been a lot of personal growth along the way there with that. Oh, and one more thing. I'm also 9 months pregnant with my second child. So the only reason I really share that with you, other than for those of you who kind of find that interesting, is, I might be a little bit of out of breath on the presentation or need to pause and get a drink of water. So I promise I normally am not out of breath when I do these presentations, but I am 9 months pregnant. So, so bear with me as I try to fit everything into this presentation in about 50 minutes while also leaving time for Q&A at the end. Okay. Again, let's dive into the agenda, why and how emotions get in the way with trading, the best way to remove emotions from trading, and where every trader's focus should be, at least in my opinion, with holding some time and space for Q&A at the end. So why do emotions creep in? These are just some things like when I was like, what are the root causes? These are what came to mind for me, right? As I think about my own trading journey, the first one is impatience. When I first decided I was going to trade over 11 years ago, I wanted results right from the beginning. Can anyone relate to that? I'm going to be asking some questions in the chat box, by the way, because I like these things to be really engaging and kind of get people involved. So again, like Anka said at the beginning, use the chat box and make sure you change your chat feature to everyone so everyone can see the responses. Hey, thanks, Danny. So impatience. I mean, when I first started trading, like I said, I wanted results ASAP. In fact, I wanted them yesterday. I was kind of hitting that wall in my corporate career where I was like, I want to do this and I wanted to work out like yesterday. Also, I probably had some unrealistic expectations with how long it would take for me to become profitable and to really hone in on what was important. I experienced losses, whether that was due to my own errors, whether that was due to not actually trading with a strategy, whether that was due to focusing on too many strategies. I lacked confidence. I experienced overwhelm. There's a lot of great information on the internet, a lot of free information, a lot of paid information as it relates to trading. And it can be overwhelming to know what you should focus on, where you should focus your time, what's real, what's not real. And obviously not having that clear focus about how to take the information and move forward. And then also making trading decisions subjectively. So I think these are a lot of the root causes, at least based on my own experience, about why emotions can creep in with trading. I'm curious, for those of you that are live on the call, which one of these reasons do you feel has been your biggest reasons why emotions have crept in, whether it was in the past or in the current. Which one resonates with you most for why you believe emotions creep in for you? I'll give you guys just a second here to type in the chat box. I encourage you all to participate if you can. I know some of you might be trying to, multi-focus, but I love seeing these responses. So yeah, knowledge, 1, 2, and 3, all of them, losses, unrealistic expectations, all, impatience, lack of confidence. Yeah, thank you guys. Focus. So, I mean, these are like real things that happen for traders, and we're all human, right? Emotions are natural, reactions are natural, but really what I want to dive into is, oh yeah, and Glenn shared, left job, need to produce income quickly. So yeah, impatience and like needing results yesterday. So really what I want to dive into is kind of what happens and how these emotions creep in and how they evolve over time when you decide, I want to become a trader, right? Mike's with Glenn. So I have a couple of different charts I would just want to share. I've found these at different points of study, both in corporate and related to trading, but they're really applicable to trading. So how emotions evolve, part 1. This chart is called the emotional cycle of change. And this isn't specific to trading, but obviously I'll tie it into trading because it is very applicable to trading. So the emotional cycle of change really takes you through 5 stages of decision-making and how you adapt to change as a person. And everyone goes through these cycles, different speeds, different amounts of times, different depths, depending upon what it is. But if you look along the left, that's kind of like the emotional stage, really teetering between optimism and pessimism, like whether you're feeling like really positive about something you're working towards, or you kind of dip into that pessimism where fears, anxieties, doubts start to creep in. And then along the bottom is time, right? So this emotional cycle of change really applies to just about every decision you make in life, which includes your decision to become a trader. So stage 1 is called uninformed optimism. You're really excited. You're just pumped to take on something new. You're feeling quite confident and you're like, I'm going to do this, right? I'm going to trade. I'm going to make money trading. And in stage 1, what's really happening is you're jumping in and you're committing, but you don't quite realize how much you don't know. So then what happens is you, at some point, transition to stage 2, which is called informed pessimism. And this is where you kind of start to realize how much you don't know, right? Or how it might take a little bit more time and effort than you initially realized. And again, this applies directly to trading as well. So then from stage 2, you kind of start to become a little fearful, doubtful, pessimistic, like, oh, can I really do this? What am I doing? Wow, this is like a lot bigger than I realized, whatever the case is. And then you go a little bit deeper after that, oftentimes, to what's called the valley of despair, which is stage 3. And this is where you're like just feeling the weight of it, right? You're like not sure. You realize how much you don't know, but you just don't know what to do next. You're feeling maybe like some failure kind of rise to the surface. Beth says she's laughing at this graphic because it's so true. So yeah, you're kind of in this point where you're like, oh, this is hard. I don't know what to do. I don't know what to do next. I don't think this is going to work. And maybe that shiny object syndrome starts to come into play. Like, okay, well, what I'm doing now isn't working. I need to look for something else, whether that's a new strategy or another way to make money or whatever the case is, right? And a lot of times what happens at stage 3 in the valley of despair is you quit and you go back to stage 1 with the next shiny object, right? With the next trading strategy, the next book or piece of educational content, or you just start over with something. And the problem with that is you're eventually going to, with that new shiny object, you're going to go right from stage 1 to stage 2 to stage 3 again. So a lot of people end up cycling between stages 1 and 3, just kind of on repeat over and over and over again. How many of you can relate to this with trading and the journey you've been on with trading? Give me a yes or a no in the chat box. Mike, Glenn, Deluxo, Beth, yes, lots of yeses flying through. Danny, I can't even keep up. Juan, yes, lots of yeses. And it's natural, it's human nature. It's this emotional cycle that we all go through. But the key is really to keep moving, right? When you find yourself in stage 3, the valley of despair, when you're like, what I'm doing is not working, I don't know where to focus, you realize you need to make a change. You need to know more, you need to do something differently, but you're not exactly sure what it is. You really have to push through to stage 4, where you get back into the, across the dotted line into optimism again, into what's called informed optimism, excuse me. And this is where you realize where you need to focus. You realize maybe what you've been missing to this point, and what you might need to learn or improve upon in order to get to stage 5, which is success and fulfillment. Or, in other words, where you've achieved your goals, you're making money trading. In stage 5, you also kind of can reflect back and be like, wow, I've learned so much. I've come so far. I am proud of myself. Like, you're hitting and exceeding all your goals, and your hard work finally pays off. So one of the things that I love about being a trading coach and helping traders is ultimately getting them out of that valley of despair, or getting them through it more quickly, because inevitably I think we all hit that at some point and in some capacity, and helping traders get to success and fulfillment. So it's a really interesting journey. Glenn says, does that actually happen? LOL. Yes. I think the key is you have to push through, like it says at the bottom. You really have to push through, and no one can push you. You have to be kind of determined and motivated internally. One of the things I talk about a lot with traders is connecting to your why. Like, why do you want to trade? And it's not just kind of that first level, which is, for most people would say, like, I want to make money. I want to make money on the side. I want to make supplemental income. I want to pay off my debts. I want to make job replacing income, to whatever degree that is. Or, in some cases, I've left my job. I need to make money. So I think the key is to push through. And, in this presentation, I'll show you some ways to push through to get through that valley of despair as well, as it relates to trading. And Mike says, I found with trading that you can bounce between stage 3 and stage 4, and that is so tough on the brain. Absolutely. Yes. I didn't say it, but you can slide backwards at any time in this emotional cycle of change, right? You can be in the valley of despair, start making progress, get into stage 4, where you're feeling optimistic again, you're making progress, you're making, your drawdowns are getting smaller, or you're having more profitability. And then maybe you have a bad month and you're like, whoo, you slid right back into that valley of despair. Nothing seems possible again. You're researching other strategies. I mean, like, yes, you can absolutely slide back and forth many times. So my goal today, and my goal as a trading coach, is to give you guys some tools and some different ways of thinking to get yourself out of that stage 3 into stage 4 and onto stage 5. And yeah, Mike says I'm on that roller coaster right now. I hear you. I've been there. I think most people on this call can relate, like they've been saying. So another way to think about emotions is the second chart I want to show you, if my clicker will work. Ooh, there we go. So part 2 of this is a little chart called the cycle of market emotions. I didn't create this, but I thought it was really relevant as well. And this is kind of, so the one we just covered before, the emotional cycle of change, is just kind of big picture, your trading journey as a whole, from your decision that you want to become a trader to actually consistently making money as a trader, right? The second one is really kind of the emotions that you can cycle through on a day-to-day, trade-to-trade, kind of just personal emotional level. So, again, you kind of start with optimism, you get excited about the potential, you found a strategy you really think you're going to like, you're like, I'm all in, I'm doing it, euphoria. And then you start to maybe learn or start trading, and a little bit of anxiety pops in. And then you kind of maybe become in denial, like you're like, I've got this. But yet you're like losing money, and you kind of get into a little bit of denial. And then the fear creeps in, and you're like, ooh, maybe I can't do this, and I'm kind of doubting my abilities. But then desperation picks up, like, I really need this to work. I really, really, really want to make trading happen. And again, I'm saying all this because I've been on this roller coaster as well early in my trading years. And then after desperation, you kind of start to panic, like, oh my gosh, what do I do now? Or maybe like, oh my gosh, I've lost a lot of money, or, whatever. And then you kind of just catapult down this spiral of negative emotions, potentially feeling depressed or like despondency. And then eventually, if you get out of that valley of despair we talked about earlier, then you can start to see some hope and feel some relief and get that optimism back again. So I'm curious, for those of you on the live call, what emotions are you feeling today about trading? Because again, I think these emotions, if you don't have a good way to control your emotions, they can cycle quite quickly. But what are you feeling the most today? Juan says hope. Love that. There's no right or wrong, of course. This is just a moment in time. Feel good today, following a system. The graphic is very triggering. It hits a nerve. Oh, I'm sorry, Beth. Detachment, hope. Okay, good. I love all the hope. I'm short the MES, so optimism. Okay. Love it. I love seeing your guys' comments. Thank you guys for participating, by the way. So the big question, how do we remove these emotions? How do we limit them? And I've found in my own experience and in helping traders, there is one thing that it all boils down to. And that is focus on what you can control with trading and stop focusing on what you cannot control. So I'm going to go into each of those little categories next. So let's first talk about the non-controllables. In trading, here is what I consider to be the non-controllables. Where price goes next. No one knows. If there was a way to predict where price goes next, we'd all be millionaires, billionaires, trillionaires. We'd all be just making money from day one. If there was a way to predict where price goes next in any market, in the stock market, in the options market, in the futures market, in the Forex market, cryptocurrency, etc. No one knows. So keep that in mind. You do not know where price is going to go next. You also do not know when price will go anywhere, right? There's a lot of speculators out there. Obviously, trading is about speculation, but ultimately, no one really knows when or how fast or how slow prices will change in any market. No one knows whether a trade is going to win or lose money. When you enter a trade, you ultimately cannot know whether you're going to make money or lose money on that trade. And I think that's really important to remember. You also do not know and can't plan for unplanned market events. There are things that happen that drive price. Some things are predictable because they're scheduled events, and historically they have moved price or caused erratic behavior or whatever the case is, but there are also unplanned market events. A lot of people try to focus on these non-controllables or try to predict things, but prediction is unattainable and it's not worth focusing on. Trading is all about probabilities over time. It's about finding an edge in the market that makes more money than it loses over time, not just with one trade, not just with 5 trades, but over time, over a year's worth of trading, over multiple years worth of trading. You want to find an edge that makes money over time. And another important reminder is losses will always be a part of the equation. So even when you have an edge, even when you're making money over time, you're still going to have losing trades. It's just part of trading. It's because there are these non-controllables. So that leads us to the controllables, which is really what every trader should be focusing on anyways. So what do you control as a trader? You control what you trade, what market you trade. Are you trading stocks, options, futures, Forex, crypto? You get to decide that. And there's pros and cons to every market, by the way. So if you're trading a market that's not working well for you because of the operating hours or the minimums or your country of residence and the laws, do your research. You get to decide which market you trade and why you want to trade it and why it's the best market for you. You also get to decide your trading style. Are you kind of a buy and hold investor? Are you a day trader? Are you a scalper? Which charts are you using to analyze? How frequently do you need to be at your charts in order to execute your trading approach, etc.? Those are decisions that you get to make. So when a trading style is not working for you, just remember, you get to decide, the time frames that you're trading. Some people love scalping because they like fast action. They like more trade setups and higher quantity of trades. They don't mind the time at the computer. Other people prefer day trading, swing trading, position trading, where, the time commitment daily and weekly is quite low. They're in trades a little bit longer, but, it's less less erratic, etc. You also get to control when you trade, right? So based on your market and your trading style, you own your schedule. A lot of times I think traders feel like their trading strategy owns them, but know that there's endless options out there for strategies in different markets, in different trading styles. So be mindful of when it makes sense for you to trade based on your schedule, based on your life commitments, based on your family, based on, if you're working a job. Know when it's possible. And what I mean by this is I'm guilty of it myself early on in my trading. Don't trade a strategy that you need to wake up in the middle of the night. That's not going to be sustainable long term. You're not going to be sharp. Don't trade a strategy that is early in the morning when you're a night owl, right? Find something that really aligns with your zone of genius and your availability. You also control when you don't trade, right? So not only just from a scheduling standpoint, but when, being familiar with market moving events that do not align with your trading strategy. There's times for me with my swing trading strategy in the Forex market that I just don't trade. It might be I normally trade, get up and check my charts in the morning, but there's certain days where I know it's a really volatile day because of a planned news announcement, etc. And I just don't trade because I'm not going to put myself in a trading situation where I've lost my edge or where the market's going anticipated to be extremely volatile. So you control when you trade, you also control when you don't trade. And you can set some parameters around that based on your trading strategy. You also control how much money you risk. This is kind of an interesting topic. I've, like I said, I've worked with thousands of traders and even reflecting on my own experience. And it's there was a time in the first couple of years of trading where I lost tens of thousands of dollars, which was ultimately my own fault. There's no blaming the market. There's no blaming my broker. There's no blaming the trading coach that taught me a strategy. It was my own fault because I put that money on the line, right? So I owned that loss. And a lot of people look to point the finger when they lose money. Oh, it wasn't my fault. It was something unexpected in the market, or, the strategy just really sucks, or whatever else. But at the end of the day, you control how much money you put on the line with every trade in any week, in any month. You control your maximum drawdown. So make sure you're owning that. You're not putting too much money on the line, and you're being, you're acting in line with your personal risk tolerance. You also control how you find an edge, right? So trading is about probabilities, not about prediction. So what things can you look for on your charts, whether, you're a technical, fundamental, sentimental analysis type of person? What characteristics or visual representations or trends or support and resistance do you want to see on your charts that will give you an edge where you'll win more trades than you lose? And you can learn these strategies or qualifications from other traders or trading coaches, or you can just think about your experience and think about what makes sense to you in terms of, trade with the trend. Okay, that's easy. How do you identify the trend? How can you objectively identify that? Make sure you know that. Oh, and maybe you only trade when something's overbought or oversold, or maybe you trade a certain pattern. Like, there's all these different ways you can find an edge. So make sure, you get to choose that edge and make sure that it makes sense over time. You also control where you enter and exit a trade, how you enter and exit. So automatically, do you need to be at your charts? Do you use pending orders? Do you use market orders? Are you shooting for a 2-to-1, 3-to-1 reward to risk ratio, etc.? And not only where you exit in profit, but you should also predefine where you exit when the trade goes against you. And that's how you manage your risk on every trade. You should be knowing how much you want to risk dollar-wise or as a percentage of your account before you ever enter a trade. And based on your stop loss, you can then calculate your position size so that you're never risking more money than you want on a single trade. And you could also Google position size calculators if you are not familiar with what I'm talking about. Also, how you manage active trades, right? So are you a set and forget trader because you have your profit targets and stop losses pre-programmed? You never tighten your stop loss or reduce risk, etc. Do you scale out your positions where you have like 2 or 3 profit targets and you're slowly scaling out? Are you ever tightening your trade to break even, where you move your stop loss to your entry price because the trade's moving in your favor, where you reduce risk, etc.? So there's a lot of controllables that you can control with trading. And I think a lot of times what happens is people focus on the non-controllables, trying to predict where price goes next, trying to predict when it will go somewhere, trying to predict that they're going to win a trade, trying to predict unplanned movements, instead of focusing on these controllables, which are ultimately a part of your trade plan. Also, the last one I almost forgot to mention is when and how you scale your growth. So a lot of people, when we go back to those emotions, the impatience, I need to make money yesterday, unrealistic expectations, start small, right? Just do yourself a favor and start small. Start on a practice account, start on a small monetary account, whatever you're comfortable with, but get results first and then scale up to larger position sizes and bigger accounts and more risk per trade, etc. But you get to decide when and how you scale your growth and your risk tolerance and how quickly you're willing to move up. So focus on the controllables. And then ultimately, this kind of like even a little bit, taking this a little bit further, eliminating emotions with focus. So if I were to say, how do you completely eliminate emotions in trading? I would say it's with focus, and specifically only trade one trading strategy. How many of you have tried trading multiple trading strategies and ended up unsuccessful? I'm raising my hand right now. When I was early on in trading, I was like, oh, I can do this. Like in college, I've gotten promoted. I was always been an overachiever. Oh yeah, I'll just like try a couple trading strategies and see which one sticks. Like no big deal. So yeah, we're getting a lot of yeses here. Or like, oh, I'll trade this one and oh, it's not really working out. Maybe I'll like pick up a second strategy and like kind of test my waters there. I mean, truly, you need to focus on one strategy, in my opinion, because it leads to kind of the next couple of bullets with focus, which is use an objective trade plan. When you focus on those controllables, you can really create an objective trade plan that has zero subjectivity, meaning your trade plan becomes your operating guide. It's like, if this and this and this are present, which is how you qualify your edge, how you identify your edge, then I enter here. I put my stop loss here. I put my target profit here. When the trade is active, I will reduce my risk when XYZ happens. And there are ways you can objectively identify that no matter what your trading strategy is. So I challenge you to make your trading strategy very black and white. Don't leave any gray area. If there's gray area, subjectivity comes into play, emotional decision-making comes into play, and ultimately, there's no way for you to operate consistently. I have this phrase where consistent execution will yield consistent results. And if you think about it, you can't do something different every day with your trading and expect to get consistent results over time. It's just like literally throwing darts with a blindfold on. So use an objective trade plan, take it a step further and write it down, right? What are you trading? How are you trading it? When are you trading it? When are you not trading it? Go back to those controllables, right? How much money are you risking on a trade? How are you finding an edge? How are you qualifying a trade? Where are you entering and exiting? How are you managing active trades? When and how are you going to allow yourself to scale up? Like all of these things should be written down, not only so that you can execute them, but you can also hold yourself accountable for following your rules. If you don't know what your rules are, you're not going to follow them because there literally are no rules and you've got that blindfold on, throwing darts at a random wall. You need to have a trade plan that is something you could follow day in and day out. And the reason that's really important is because it allows you to track your performance. It allows you to see if you're missing things. Are you missing qualified trade setups? Are you accidentally entering trades that you shouldn't have been in based on your trade plan? And are you making any operational errors in where you're entering, where you're exiting, how you're managing? If you don't have focus on one strategy, obviously it's very easy to blend things. If you don't have an objective trade plan that is kind of a very black and white set of rules, then there's gray area, there's emotional decision-making. There's no way to hold yourself accountable. And if you don't have your trade plan written down, then it's easy for you to change the rules. I'm just going to be quite honest with you. So let's just do a raise of hands. There's no right or wrong. How many of you have a written down trade plan today? Give me a yes or a no in the chat box. So we've got yes, no, no, yes, no, yes, yes, sure do. A lot of you do, which is amazing. Congrats. Some of you don't. And I think that's a really low piece of hanging fruit for you, where if you're trading today and you don't have your trade plan written down, challenge yourself to write it down. And then Janie says, have it and also follow it, question mark. Yeah, that's the next level. You might have it written down, but are you following it day in and day out, or are you making up new rules as you go? But I could preach on this or do like a whole day's seminar on trade plans, creating your own trade plan, making sure you follow it, etc. But obviously I don't have enough time for that today. Okay. Next, once you track your performance, you work on your operational excellence. Ultimately, from there, a lot of people stop here. They track their performance and they're like, okay, I'm either doing good or I'm not doing good. And then they kind of either keep pushing on, doing what they're doing. If they're profitable, then it's great. If they're not profitable, they're probably in the valley of despair and maybe having shiny object syndrome. But whether you're profitable or not, an extra step that I always encourage traders to take is to work on optimizing your entries, exits, and trade management. Even if you're profitable, Because if we think about trading, profit is purely determined by where you enter and where you exit, period. That's how simple trading is, to make money based on your entry price and exit price and the difference. So if we keep it in those simple terms, there are two traders and their entry price and exit price will determine if they're profitable or unprofitable on the trade, and also the extent at which they are profitable or unprofitable. So if you think about it in those terms, whatever you're doing today, whether it's working or not working, there are likely improvements you could make over time to where you're entering, where you're exiting, both for your stop loss, losing trades, etc., and also for your profitable trades. A lot of traders don't kind of spend the time working on optimization, but really your trade management and improvements to your trade management can truly amplify your growth in a very big way if you spend some time doing that. So, you could take your last 10 trades, look at them again, say, hey, what if I had reached for a larger profit? What if I had reduced my risk earlier? What if I had moved my stop loss to break even, as the trade moved towards my take profit? There's all these different things you could do to try to increase how much you win when you profit, to decrease how much you lose when your stop losses hit, to increase the percentage of times you are profitable, to decrease the percentage of times that you take a loss. There's all these different little moving parts. And as you think about your strategy, you have to start at the top of this list, right? Trading one strategy, using an objective trade plan that's very black and white with your decision-making, having it written down so you can hold yourself accountable, tracking your performance, being true to yourself about, are you missing things? Are you making operational errors? Are you following your trade plan? And only when you've done all those can you then start to work on optimizing your entries and exits, because you have to have consistency in some trades over time in order to be able to go back and look at them and optimize your entries, exits, and trade management. And then from there, obviously, eliminating emotions is by starting small and scaling your growth once you've achieved personal performance milestones, right? So what I mean by this is, if you're trading with too big of amounts on each trade, or if you're risking too much money each week or each month, you're experiencing drawdowns that you're not comfortable with, it means you're putting too much on the line. And that is when those emotions are going to flare up. That is when they're going to be amplified. So start small and earn the right to trade with larger amounts. Know that starting small is obviously, the goal is to be temporary. You're not going to make, hit your income goals trading on a small account or practice account, but know that the goal is to start small so you can not let those emotions and fears and doubts creep in. Get results first, make money first, get a profit rate that's positive first. And operationally, once you hone in on this operational excellence, scaling is easy, right? If you can make 10% on a $500 account, you can make 10% on a $10,000, $100,000, $500,000 account, right? Because operationally, nothing changes other than the position size of each trade. So, but you have to get this operational excellence first. Okay. Where would you say, for each of you that are on the line, where is your biggest opportunity in this list? Which one do you think you could focus on that would make the biggest impact to your trading if you were to pick one to focus on today? I'm going to take a drink of water. Focusing on one, holding yourself accountable, sticking with a single strategy. Love that. So yeah, everyone's journey is different. All of you are in different places, obviously, but I think, when you spend the time to attend these sessions, kind of finding your aha moments are really important, or your like low-hanging fruit, as I call it, to take away. Yeah, sticking with a single strategy, tracking performance, 4 and 6, the last one maybe, optimizing your entries and trade management. So yeah, you know, trading is kind of like this never-ending journey where I think there's, for the most part, always opportunities to improve. So, you know, finding kind of a good action plan is important, and keeping it simple, right? Like, don't try to do all this at once. Pick one and say like, okay, let me make a difference on this one before I go on to something next. Okay. If you liked the previous slide on eliminating emotions and wanting to focus on these, I do a deep dive into all of those focus areas in my book. So it's only $5. You get a free bonus if you go to the link below, tradefocus.com/book. I just released this earlier this year. It was a labor of love to produce, and really just encapsulated all of kind of the high level things I just talked about, but gives you a very detailed action roadmap for drafting your trade plan, focusing on operational excellence, optimizing your results, and ultimately scaling your growth. So if that's something you're interested in, getting some more specific steps and kind of the more detailed approach to tackling any one of those or all of those, check out more details about my book on that website. And then I'm going to quickly go into a recap and then open it up to Q&A. I always sometimes like to do these funny images. I thought this little duck comic was quite funny, but a recap of what we covered: why and how emotions get in the way with trading. You know, we talked about that emotional cycle of change, the cycle of market emotions. We talked about the best way to remove emotions from trading, you know, focusing on the controllables, forgetting about the non-controllables, remembering that trading is about probabilities over time, not about prediction. So if you find yourself kind of saying like, I know price is going to do this, I know this is going to be a winning trade, kind of check yourself. Remember that trading is about probabilities, and really focus on those controllables. And then we talked about where every trader's focus should be, at least my opinion about where every person's focus should be, which is trading one strategy, using an objective trade plan, seeing it through, meaning tracking your personal performance, optimizing your results, and scaling only after you've gotten results first. So I am going to open it up to Q&A. If you have any questions, post them in the Q&A box, which actually I don't know if we have. So post them in the chat box. And while you guys are typing, I'll keep an eye on the chat box, but I have kind of a open enrollment in my Forex trading program. So if any of you are Forex traders or want to be a Forex trader, I'm just going to briefly talk about an open enrollment period that I have going on right now. I have a program called the Consistent FX Accelerator. I teach you my exact Forex swing trading strategy. In that kind of lessons, it's truly like an A to Z education for learning how to trade my specific strategy. The goal is to get you trading quickly, in less than a week. I have put together a handful of videos really to get you from start to finish in a very targeted way. And you can download and save all the videos and documents. They're yours forever. You also get a toolkit, which includes a trade plan, a trade journal, a growth and scaling calculator, and a lot more. Again, just download them and they're yours. And then I also offer a trading community. And in this community, obviously hundreds of other traders, but you get access to my personal weekly chart analysis where I share all the trade setups that I see for the week. You also get access to my weekly group coaching calls where I go through the trade setups each week in more detail. I answer your questions. I do additional training. And then in the group, in the trading community, you can ask questions anytime in between the calls. Enrollment was closed the last month and a half. It's open again through the end of the month. And this is also your last chance to get in at $9.99. So the value's nearly $6,000. It's your last chance to get in at $9.99. I also offer a payment plan, 3 monthly payments of $333. And enrollment for this offer closes on May 31st. So basically at the end of the month, enrollment closes again. I really keep enrollment limited so I can give everyone the personal attention and make sure that I'm very attentive to all the questions that come through the group. So there were some spots that opened up. And also, like I mentioned, well, here's the website if you're interested in checking out more details. I have some, testimonials and things like that on the website, consistentfxprofits.com/open. But, I haven't done a price increase to this program in like 2 years. So it basically stays full more or less month to month. A few spots open up, every month or two, and I'll open enrollment again. But after this enrollment period, I am going to be increasing my prices. Have tried to hold strong for a couple of years, but alas, the time has come. So if you're interested, check out more details at consistentfxprofits.com/open. I'm going to go over to questions as well, but here's just also a contact and links. So if you end up not getting your questions answered today, feel free to email me at support@tradefocus.com. If you're interested in the trading book that I talked about for $5 with the free bonus, you can go to tradefocus.com/book. And if you're interested in learning more about the Forex Accelerator, where I teach you my exact strategy that I still trade today, every single day, getting my trade plan, the trade journal, tracking documents, and also a community where I share my trade setups and results each week and group coaching calls, you can check it out at consistentfxprofits.com/open. Okay, I'm going to go over to questions. Matt asked, can you touch on the process of testing a strategy when you've traded it enough and when to try something else, AKA system hopping versus helpful exploration? Yes, great question. So, in terms of testing a strategy, you have to kind of keep in mind the number of trades and also your trading style. So I would say in general, it's good to have at least a month worth of trades, but obviously the more trading history you have, the more representative it's going to be over, of the results for a strategy. So try to get at least a month's worth of trading data first. At least 10 trades, the more the better, for sure. Again, it just depends on if you're a scalper or like a position trader. As a swing trader, I average about 7 trades a week. So in a month, I average about 28 trades. Certainly a month alone is not indicative of like a full year's results at all, because you can have positive months and negative months. But I would say at least have a month's worth of trading data where you've been consistently executing an objective trade plan. From there, you can start making observations, right? Take screenshots of your trades, look at how you're doing your trade management. And there's kind of a checklist I go through where I'll say, I just kind of ask myself, what is something I could do differently with my entry, my stop loss, my profit targets, depending upon if you scale out your positions, and how I reduce risk so that I could, one, improve my profit rate. So improve the percentage of trades that would have been profitable. And I'll just go back and kind of visually look at screenshots or look at my trade journal and say, what could I have done to improve that across these sample of trades, right? And then I'll say, what could I have done to reduce the losing trades, right? Maybe that's using a trailing stop loss. Maybe that's locking in profit earlier. Maybe that's moving my stop loss to break even. With like one of the things I do with my swing trading strategy is I have 2 profit targets. And when price moves halfway to my first profit target, I will move my stop loss to break even, which means the trade has 0 risk. I'm not opposed to break even trades. If I get a trade that triggers, starts moving in the direction of my profit to a certain extent, it's all like relational to the size of my stop loss measurement. But if I get a meaningful move that I want to see in the trade, I do not want that to turn into a losing trade. So I think something that's really underutilized with traders is reducing risk as the trade moves in your direction. And that can look and feel like a lot of different things. You can automate it with a trailing stop loss. You can do it based on price action, use indicators for like objective guidance, et cetera. But I think reducing your risk as a trade moves in your favor has really made a significant difference in my ability to produce profits over time, and also my ability as a trader to reduce my drawdowns. So that's something that you should consider. But ultimately, just kind of with you knowing your strategy and having some experience and seeing and reflecting on the charts before and after the trades are over, how can you increase your win rate? Test a little scenario over those sample sets and see if it improves the P&L, right? What's something you could change with how you operate to reduce the number of times you have losing trades or the percentage of losing trades? Test that through as like a single thing and then see if it works. Additionally, what I like to do is figure out how I can turn losing trades into break-even trades and kind of test that through not just the trades that it impacts, but you also have to test it against the profitable trades because it may impact those trades as well. So you have to kind of change one thing, run it through the sample size of trades, and then ultimately see how would that have impacted your P&L against the way you have been trading to date. And ultimately, you're just looking to find a scenario or a change in how you operate with your entries, exits, or trade management that produces a more profitable result over that segment of trades. And I go into detail, like I said, more in my book on this. But there's a process you can go through to kind of systematize it. And then once you do some individual scenarios, you might find some opportunities to test multiple of those that made a positive difference together. So there's a couple of iterations you can do, and then obviously you can make your sample size bigger and apply it over a larger segment of trades or of trading times, just to make sure that it does in fact produce better results over time. Or maybe this is like a quarterly process that you do, right? Because the markets are always changing. If you're evolving as a trader, it's something it's a process you could deploy quarterly or twice a year or once a year. Find a process that works for you is what I would say, Matt. Great question. And ultimately, in terms of system hopping versus exploration, I think it's, if you get to the point where the strategy is negative, you can't find a way to make it profitable, that's when you need to explore some other options with ultimately how you find your edge. So you don't necessarily have to start from scratch, but go back to how you qualify trades, how you've identified your edge, and you might be able to find some tweaks to that, or even your logistics, right? Like, what are you trading? When are you trading? When are you not trading? Maybe you need to make some modifications to that before you just start from ground zero again. Well, thank you so much. I know I'm up on time. I did get many of your questions answered. Thank you all for your participation. You're welcome. I love all the kind words here at the end. If you have any other questions, don't hesitate to email me if something comes to mind or if you're watching the recording. And then obviously there's more information on both of those links as well if you're interested in the book or in learning my Forex trading strategy. So have a great day, everyone. Have a great week. And don't hesitate to reach out if you have any questions. Thanks, David and Anka.